Okay, everybody, welcome. Thank you for tuning in. Good afternoon, good morning, good evening. As we head into Christmas here and into the weekend, we're going to try to keep it fairly simple and just might sound like a broken record, but remind you, I know a lot of you have been wanting to see more charts like this on my site. I will finally get there for you early next year. Okay, hopefully very, very early next year. And I think you'll like it. Saw a good summary of the quantum threat. Obviously, it's just back in the news as it always is, or someone starts the rage tweeting and the fear tweeting. My friend Marty did a good summary of it yesterday, so I'd recommend you read that. Marty Bent, TFDC, and I'm not going to address that specifically, but just the idea of the fear. It's the similar line that I hold typically when we talk about Bitcoin, how we can be grateful and have some patience at the same time about where it can go, because if you're trying to swing trade, if you're trying to play on the next wick or the next ABC correction, there's a whole world of traders and degens on TradingView that you can obviously follow for that. So that's not what people like Marty are about, and myself neither. He mentioned Michael Howells, how he has a report as well released, how he's they're buying up Bitcoin on this dip. Everybody's going to have their strategy. All right, it's a financial asset, but there's just fear that's people use with the quantum debate. All right, earlier this year, around Liberation Day, we also had a major drop in the. Well, that was, I guess, that was quite a bit after Liberation Day. It was sometime around October, wasn't it, or September? We had a major drop in the markets. Someone perhaps trading on some administration news about certain coins, and there was a major drop in the altcoin market, if you want to call it that. Bitcoin remains the most, one of the most liquid assets in the world, best quality collateral. But you can have big moves, right? You can have 75, 80% drawdowns. You can have double, triple, quadruple run years, spans of years. And that's just how it's going right now. It's being adopted. I want to do a little geopolitical stuff as well. I'll do that after. But I think it all fits together. Right? We have wars. We have fear. We have a lot of people, especially somehow people that are typically privileged, saying that they're underprivileged, that they're suffering. I'm not saying I know the answers to all these questions, but there's a lot of hysteria out there. So, again, if you do not take the newsletter view, which is the YouTube thumbnail view, which is there's crisis around the corner at every turn, you can find these dips as opportunities, and you can take comfort in that the trend itself represents something very strong, which is a network adopting power curve. sort of for the effect, I've drawn these bands all the way back to the Genesis block, and they're not even fully appearing here, but just so you can see how this nice power curve becomes a straight line on log scale. All right, don't look at these bottom bands. I'm still working on all this, but it'll be much cleaner next year. And when you get a straight line on log scale, it means power growth. What is power growth? It means proportional growth. So that's what Bitcoin is doing. Bitcoin is growing in a proportional manner to itself over time. It's not growing in a often unstable exponential fashion, which is almost every other asset in the world. So you get this nice, beautiful log straight line growth. Take this off. When we take log bottom off, it starts to look like this. All right. And again, if this were an exponential curve, it would be a straight line. That is, log linear would be a straight line. Look, it's a hard market to call at the moment. Is it going back down to the 0th percentile next year? Anything's possible, but the fact that it has not gone up to the 90th plus percentile this run makes me think no. Anything's possible, but again, we can just draw our conclusions based on the bands, and the bands are at 60K for the lowest. All right. And if you think back really just to the price of Bitcoin over the last 2 years, all right, we're going back now even to, let's say, yeah, a year, a little over a year. We've been at the same levels we are now, all right, on a linear sort of basis. We've been between, anywhere between 120K and 80K. So I don't see any, threat to Bitcoin here. The quantum fear has been talked about so much. You can go to actual developers, ask them about it. I remember at early Baltic Honey Badgers in 2017, 2018, Peter Todd joking about it. Not a laughing matter, but it's not like people aren't thinking about this. Wall Street likes to play games as well, so we have people sort of seemingly not talking their own book, but perhaps they are. Perhaps they're looking for lower prices to enter. Bitcoin is on sale. We have other ways of measuring Bitcoin that can show us that Bitcoin is really, really on sale. All right, here's the price of Bitcoin in silver. All right, we talked about this yesterday for the first time, 1,500 ounces of silver. And that's a screaming deal for Bitcoin. All right, you go back to the dog days of 2022, 700 ounces of silver, and that was extremely low for the time. That was a below 10 percentile event. Now we're pulling this curve down as far as we possibly can. Again, without breaking it. This is not any sign of breaking the power curve. It's just stretching the levels of where these percentile bands will play out in the future. Silver's kind of fun. You have really, really tight bands all the way up even to the 90th. All right, so do your own math here as we go it out, but draw it out. But if by the end of the year silver stays at the same price that it is, but Bitcoin silver, that is, silver stays at the same dollar price that it is now, 50 plus, 60, whatever you want to leave it at. But Bitcoin silver returns to the trend of 8,000 silver ounces per Bitcoin, do the math. Do the math of what that price will be per Bitcoin. It's easier math per gold, slightly easier. Let's go December 2026. All right, let's just assume cycles are gone, but Bitcoin gets back to the mean, back to the OLS, the black line. 90 ounces. Let's say it's at $4,000. That's $360,000 Bitcoin. At least 3x in dollar terms higher than now, and indeed it's, if you're normalizing for gold now, it could be even higher. Right? So again, we have more than one ways to look at the price of Bitcoin. We have different governors. It's like a price per square foot versus a cap rate, or price per square meter versus a cap rate in real estate. There's different ways to value stuff. And when you look at it through the lens of other assets, you can see more interesting patterns appear. Look at the S&P 500 again. Just like gold, just like silver, we're scraping the bottom of the barrel, setting new lows every day as far as statistically where Bitcoin versus the S&P would be. This is kind of shares of the S&P, or how many times over one Bitcoin could buy the index. You can't buy the index. You can buy ETFs, but it's just a mathematical calculation here. And at 12, 13 times buying the index with one Bitcoin, you're at a 50% discount to the trend. Trend is 26 times. Bitcoin's posting 13 at the moment. So again, with this metric, considering all the AI stuff, if some AI doom and gloomers come into Bitcoin, well, to get back to the Bitcoin S&P ratio, it's actually not as aggressive of an upside as it is for, say, silver. Which means if you have a lot of silver right now, it might be time to buy Bitcoin. Again, not financial advice, but the point is, if you're a big AI investor and you're overloaded on stocks, you might want to go into Bitcoin. You could have perhaps, an easy double if you get back to the trend. The trend is here. Again, never financial advice, but that's my standard caveat. So a bit more conservative upside. Let's go here. Show the 2080. And these are quantiles now, so they're not even completely, they're not all going to be parallel. And indeed, the OLS looks a little bit this is the interesting thing about quantiles. This is sort of an all-encompassing number. These bands are sort of more looking at the residuals that are farther away from the mean. So, but perhaps these are more valuable sort of indications of where we could go. So it could be that Bitcoin will sort of grow a bit shallower compared to stocks in the next few years. We'll see. S&P 500 is vastly skewed towards that Magnificent Eight. tech AI stocks. What remains quite interesting is the Bitcoin dollar price, okay? Notice how that black line stays well inside all of these quantiles for a long time. Here's another way. Dollar, sats per dollar. Sats per dollar, right? So just inversing the Bitcoin dollar price, multiplying by 100 million of that number will give you sats per dollar. And I think this is as well. Someone said, Bitcoin Polska maybe, that, you know, this can show you the gravity of Bitcoin's value in society. It's like a black hole, right? It costs you less and less sats every year to pick up $1. And what's actually interesting, look, it's just the same trend line, but they'll sort of paint a little bit different numbers. Notice how the OLS here is a little bit higher. Right, so when this chart goes down, it's a good thing for Bitcoin, okay? Notice how this is a little bit higher now, just sort of the law of averages and the way that it was so high up here, okay? So unlike dollar Bitcoin, Bitcoin dollar, yeah, Bitcoin dollar is actually looking even better if you look at the quantiles. The quantiles are skewing it more down. And again, the quantiles are, it's still statistics. Some people would argue the OLS is better. This is the OLS. Some people would argue the quantiles are better. But the quantiles use sort of only the distinct ranges of the residuals that are closest to them. And they, you know, not all lines are parallel at all, as you can see. But still, notice how they go down quicker than the average, so to speak, the average, the OLS. So this chart actually looks quite bullish. Right? See how the bull tops the exhausted buying of Bitcoin at high prices. It's the inverse, right? But it's a slightly different chart actually. Just the way the numbers shake out than dollar Bitcoin. Dollar Bitcoin looks a little bit sort of smoother. This is actually an even more bullish chart for Bitcoin, is Bitcoin dollar. It's actually dollar Bitcoin, I guess. How many sats per $1? So during this next year, are we going to float back up, you know, to, I don't know, 70, 80, 90 there to 2,000 sats per dollar, right? Well, right now we're close to 1,000. Maybe. But do I think that we're going to go back to even above 2,000? This chart would tell you no. Like, almost certainly no. All right, last time we hit the 90th here, which is, again, super low in Bitcoin dollar terms, all right, the normal chart, it was 6,000 sats per dollar, 6,000 sats back 3 years ago. So this, again, this should give you comfort, this chart. To go back to 6,000 chats, you'd be off the chart here. You'd be way cheap. It'd be insane. The 100th percentile right now is 2,000. 2,000. Actually, the 100th is below the 90th, again, which can happen because you have weird, they're not parallel. This is how quantiles work. Extremely unlikely, statistically, that from here we fall by half. All right, of course, you can see that in this chart, right? Statistically, here's the Bitcoin dollar price. Right, this is Bitcoin dollar. The other was dollar Bitcoin. How many dollars per one Bitcoin right here, this chart? You know, again, the 0th percentile is 60 grand. Where are we right now? 90 grand. So again, it's showing the same thing, but I think this is this should bring even more clarity for how strong this asset is. Like Peter Schiff does not want you to see this chart. Extremely unlikely that we fall by half from here based on the power trend. It'd be a once in 1,000 event occurrence. And a year out, it'd be extremely unlikely we'd even be at 1,500. Interesting how the 90th again is the worst price, but that's again this is how quantiles work. So the worst price there, 1,700 sats per dollar, is only about a third worse than today's price, approximately. The point is, hodling is always a good recommendation. Good morning, Pan B. Yeah, I know I got to get to your questions still. I haven't really. So, but with my new setup, which everybody will be able to try next year, it will be much easier to do. So we can see. Sort of rerunning a lot of these manual at the moment, and it's just too cumbersome, but we'll be able to get this much easier soon. Another thing about today's theme, which was also yesterday's theme and most of the time my theme about keeping calm here, is the old money supply. Someone's got to tell me when this is going to zero. Right, are the deflationists going to be correct here? Is this actually going to zero? Of course it's not. But also about reporting, I just checked in because it should have been done already a week ago. Whether this is because of, I don't know, craziness in the administration or funding or what, but they're not going to release, the Fed is not going to release the components that I can use to make my own M3 money supply, which the Fed doesn't even calculate anymore. They're not going to release it until like the 9th of January. Usually it would take until about now, mid-December, to get third quarter's data. Now we got to wait till January. So this is another reason why I don't rush too much to price Bitcoin in money supply. We can do it, and we will do it more. We're less than a couple percent of the total U.S. money supply, or worldwide. We're less than a couple percent for sure. 7% of base money, which is 26 trillion at the moment. But these are just, they're helpful. They go up and to the right, right? Except for these, which are supposed to be base money. But, broad money, of course, goes up and to the right. But it's hard to predict exactly where the price of Bitcoin is going based on any one money supply. And I would caution, as I've been saying for a while, caution people if you see that like USM2 is always 8 weeks lagging or leading whatever the Bitcoin price will do. First of all, Bitcoin's a global asset. Second of all, M2 is hardly the largest money supply in the United States. And for all the doom and gloomers out there who said the dollar's going to zero, it might at some point, but we got a while before that happens. And the power curve is a much, much more likely scenario for Bitcoin getting to global adoption than all of this money crashing next week. And which I understand in this chart means it's going to infinity. It's like crazy numbers. But still, all of this value getting onto the Bitcoin network doesn't seem likely. That is in a week's time or a month's time or even a year's time. So again, when you see YouTube thumbnails that the world is ending next week, it's just as apocryphal as many religious slogans for thousands of years now. Good morning, Moon Guy. Glad to hear it. Yes, indeed. Up and to the right. Good morning, Kurt. Where's your Trueflation number? Chapwood index. Also, did you see what I did on, I think it was Monday? The gold ounces exhibits. I forgot to tag you on my other handle on Twitter, but I did answer your question. So yeah, it's funny. It's funny. This M3 in the United States, which is probably the most important money supply in the world, it won't be released, or I won't be able to get third quarter's information until the start of next year. And it's going up for sure. Repurchase agreements, institutional money market funds, institutional time deposits. Really, the time deposits, as you might expect, is not a high velocity one. But money market funds and repos are. This one I didn't actually quite catch when I was looking at it before, how the OLS is floating higher, yet the quantiles are not, which makes me want to believe the quantiles a little bit more, even though the OLS is 95% R squared. But you have all these other lines that are kind of, yeah, the 90th. You have all these other lines that are kind of converging around this level. Still tells you the same story. Bitcoin is undervalued relative to where it's been, but doesn't portray as high of an upside if people that own stocks go more into Bitcoin. Suggests maybe double or less even, right? If the price is 13 and we only go to 26, all things else equal, we double in dollar terms. It was a busy day at the European Commission yesterday. I would recommend, as always, people check out Michael Weiss, an actual journalist. So using the actual reserves as a full-on reparations loan was not decided, but at least the reserves remain indefinitely frozen, which was a good move that they made 2 weeks ago. So now Viktor Orban can't threaten to steal it back from EU guardianship before the war is over. It's indefinitely frozen until the war is over, which is good for Europe. And Michael Weiss quoting, what's his position? First Deputy Foreign Minister, Sergei Kislitska. Indeed, there are moments when one should keep in mind that perfect is the enemy of good. It was a long night for European leaders, but they were able to come with a workable result. 90 billion euros to keep protecting Europe while defending itself. I still don't think the average European understands what Ukraine is doing and what they're fighting for, but Ukrainians sure do, and we in the Baltics sure do, and the Poles do, and the Finns and the Romanians, but it's not bad. At least the reserves are still, not going to be come up for a vote every 6 months now. And Viktor Orban. The other thing, by the way, which again, I know I've talked about this a lot. You guys know I'm not a burn it all down sort of libertarian, but the Orban competitor in the race, Peter Magyar, whose name literally means Hungary or Hungarian, he's been just flying in the polls miles ahead of Orban and still, as far as I can tell, pretty much shadow banned on Twitter. I mean, he's writing in Hungarian, it's true. Where's this tweet? I can't show it. But in any event, over the weekend, it was incredible. This is last weekend, okay? So those of you that have been to Budapest, beautiful town, everything points to ending autocratic rule in Hungary. Orban regime, of course, has been in power since 2010, the illiberal democracy, as he says. But the real test is going to be, I think, here in April for Europe and for even America. Everybody should know by now that the Trump doctrine is a copy-paste of what the Orban regime has done in Hungary for the last 15 years. And it's looking like the only way that Orban can stay in power under a legitimate election is if he does a Russian-style steal of an election. And it would be even more dangerous, in my opinion, if the United States certifies, or of course they can't certify, but if they approve of that result. So we're in highly, highly dangerous times, but again, I'm not a pessimist or a fearmonger like other newsletter writers. So that's just how I'm looking at this. And of course, Ukraine getting the money to actually keep feeding their soldiers is super, super important. Thanks. I got to check. What do you mean, though? What website is this? Just truefellation.com? I've seen it before. But yes, it will. You know, when we get to 2040, I think that's... I mean, it's hard to know if there's ever going to really be a line in the sand. It's funny, my dad told me something yesterday that I didn't know. Like, Constantine, when he brought in Christianity officially to the empire, which I did know, you know, this is after 400 years of sort of the Romans trying to tamp down various religions that were they were looking at as, they didn't really care if people practiced religion, but they did care if it was, you know, if they were unruly. And there was no public assembly, which is why the U.S. had the right of public assembly. You could not you could not basically protest your rights in Rome. But anyway, that, you know, there was a gradation there from the Republic to the Empire to the Holy Roman Empire. So what was my point here? No, Constantine, who made Christianity the official religion of the Holy Roman Empire, which again, it's hard to really say if there was one sort of date when Europe became Christian, but you could say perhaps that. But what I did not know is that he introduced Sunday as a day off. And I almost wonder if it's going to be something like that. Not, it's just an example of, you know, is there just going to be a day where everybody sort of realizes, yep, we're going to get our paychecks in Satoshis, or nope, I'm just not taking that dollar paycheck anymore. I'm not sure, but the pace is much faster than changes from the Roman Republic becoming the Roman Empire, becoming the Holy Roman Empire, which I think many would argue, at least as far as technological adoption was concerned, was a little bit sideways for a few hundred years, if not more. We're moving much faster. Bitcoin is way more supreme tech than anything that the Federal Reserve can come out with, or any central bank. So it's going to be soon. The charts tell us 2040, 2041 is when we get to 100 trillion, which is about the size that the monetary base would be projected at its current growth rate. So 2040, again, it doesn't mean that that's just 50-50, actually. That's 100 trillion for Bitcoin, 100 trillion for the monetary base. How the cross-collateralization will work there, how many loans are Bitcoin denominated, how many loans are dollar denominated. It's going to be a lot to parse through. But if you mean 100 years from now, I think that's easy. Easy 100 years from now, but maybe 50, maybe in our lifetimes, maybe. I don't think 10 years from now it's gone. I think also there's going to be a lot of remilitarizing all over the world right now. Those that hold the guns also are going to want to enforce their fiat supremacy. This is a tough chart to unsee, though, isn't it? Let's look at this, by the way, out to 2040. I don't think I've even ever done this before. So it does look a little bit wacky. You even have the worst percentile coming out on top. Again, everything's independent of itself. That's why this is not like a multiple analysis or anything, but let's take that off. Let's just look here. Yeah, I mean, 100 sats to the dollar. That's interesting as well, actually. Well, it does make sense. It aligns with the $100 trillion thesis, right? Is at $100 trillion, every Satoshi is worth a penny. Doesn't mean that's where it needs to stop, but that is an interesting sort of milestone. So this is the point. In 2039, on this chart, where a Satoshi is worth a penny. 100 Satoshis will be 100 pennies. Again, notice there's no, we'll put the 0th, we'll put the OLS. OLS is actually quite conservative. But again, notice even out to the end of this year, sorry, next year, there is no projection there that is above 2,000 sats per dollar. And only really one that's kind of above 1,500. Two. Oh, actually three. The OLS itself, I wasn't even looking at that. So, again, if you look at it that way, and if you really say we are on the 4-year cycle and it's going to be worse because that's what it is and that's how it works, 4-year cycles. At, at 1,100 sats per dollar, and again, assuming we go down to somehow bottom out magically next year, it takes a full year, 4-year cycles are still intact. Let's stick with 1,500. That's only a 25% drop from here. So if you think about it that way, I think, again, it should give comfort. There is no projection as far as sats per dollar using a quantile regression with all the data that I have in my database that shows us that we will be worse than a 25% drop in sats by the end of the year. If it's before the end of the year, if it's like June, it's a little bit different calculus. let's say, then it's still 2,000. So it's close to, maybe in the summer, somehow we bottom out in the summer, it could be 50% drop from now. Maybe. This does not tell you timing. It does not tell you when something will happen. It just tells you relative risk based on an extremely powerful trend. Let's put this on log bottom. Why did that not work? It's too buggy. This chart version is just too buggy. It'll be better in the next release. And again, I'm a broken record, but you guys will, I know people are asking to see more charts themselves, so you don't have to watch me. And it's coming. Should be a straight line on log. Try it from here. There you go. Looks better. I mean, imagine being Peter Schiff and trying to fight this trend. Peter Schiff was all throughout this period at 20 million sats per dollar. That is 0.2 Bitcoin per dollar. 0.2 Bitcoin per dollar. $1 would get you 0.2 Bitcoin here. All the way till today, Peter Schiff has been bearish on Bitcoin. And by the way, when this goes down, it's good for Bitcoin, bad for the dollar. I should show you sats per gold, actually. I think I can pull that up. Yeah, let me run through it again, just so you see. So, based on this chart, it all depends. But the simple assumption is, let's say for whatever reason this was the top, or these last few years were the top. We don't have a blow off, and we're still going to go into a year bear, as we always do, or we always have, right? So 2018 was the down year. 2014 was the really down year. 2022 was a really, really down year. Let's say 2026 is a down year. All right. So cheaper Bitcoin. Fine. That means this green price is going up to the top end of this band. If we just look over the course of the year, the worst is a 25% drop. And by that I'm using, well, almost the worst. I'm sorry. Almost the worst. I'm not counting this 9, which got closer to 2,000. But look at these. Look at all these. Okay, 1,650. I'm using 1,500 sats there. So 1170, which is today's sats per dollar price, divided by 1,500, 70%. It's 22% drop. Let's call it a 25% drop. Okay, that's if we assume we bottom out a year from now. If, again, cycles are totally whacked out, maybe we decide to go down here until next summer, which is actually could be worse prices because we're closer to the today's price and higher trend lines. Then it could be that 50% drop, 40K, whatever, whatever you want to call it. Because here you can clearly see in the summer, put the 90 back too, there are more levels that are closer to 2,000 sats per dollar. But not even that many, really. Really just 3, right? The 90th, the 100th, and the power, the OLS. And actually most of them are still better than a 25% drop in price. For those that are just tuning in, and it's a little bit confusing, we're looking at sats per dollar and trying to back in what could be the lowest drop in price based on the trend, but that's what the numbers say. I can do a sats per gold ounce quickly. Let me try to do that. Let me see. One second. I know you guys love the dead time when I make charts on the fly, but let me just... One second. We'll go in for, this is the sats per dollar chart. I'm going to add for a second for you one that I've actually never looked at myself, which is sats per gold ounce. This is really the Peter Schiff chart, which I'm about to do. One second. Let's see if this works. Curious how this will look. All right, so what you're looking at is sats per dollar. And let's go ahead and show sats per gold ounce. That can't be right. Hold on. know you guys love the dead time. It's not working. Sorry. Next week. This is what I get for trying to do things on the fly. All right. Monday. Monday I'll have it. It is, the answer is it's slightly, as you might expect. I can get it to chart on my new engine, but I can't get it to chart on an export. It's about 5 million sats per gold ounce. 5 million sats. Just so you can think of that. And, you know, the same power curve, 93% R square. It's actually a little bit even better than the dollar. And the sort of the current price is above the OLS. And the OLS is not this extreme as it is here. Interestingly, meaning the OLS is a little bit lower. Again, it paints the same picture as all the other charts, but instead of the sats per dollar being down here, the sats per ounce is like up here, and it's 5 million. And just like the Bitcoin gold price, right? We say the first one first, 1 Bitcoin per gold. So the Bitcoin gold price, it's again, it's the inverse. So the price is not up here as you would expect. The conclusion is always going to be the same. Bitcoin's very cheap right now if you're a gold bug. And just like the dollar Bitcoin price or dollar sats price, it's hard to imagine how much lower this trend line or the price could go in relation to the trend for gold. For dollar, yes, we can see it go 25% lower, maybe 50% lower by the summer, but not too much more crazy than that. Also, I have to say, this is something I didn't think of either. This is kind of interesting, is sats per dollar actually gives us a different a different view of the extreme. Okay, so again, we never went above the 90th percentile here, right? We didn't even go above the 80th, barely. There's the hundredths here. Let me take all the rest off so you know exactly what I'm talking about. Even the OLS. All right, I thought we'd be talking about how many days we'd be above the 8 and the 9 based on prior history, right? We didn't even touch that this cycle. We barely touched the 8 on the quantile. If you do different measurements like I've done with multiples, you get a little bit different result, but you get the picture. We have not tested highs here. But now you need to think of the inverse, all right, and look at the way it looks. It looks different. So, sorry, I need to refresh that. Here's the one. Okay. So, let's check this again. So 20% we easily didn't clear, right? We easily didn't get into, easily might not be the right word, but we just did not get up to the 20% of the time zone at any point in this last cycle. Here, we actually did. We did. Okay, so this is the top of 2022. And now you have to just kind of think of the, subtract 1 from these results. So this is the 100th percentile. This is the 100th percentile. It's the 0th, but it's just the inverse. This is the 90th. Right? And so as we go here during this period, we interestingly, this is something I haven't even noticed myself until just now. We did get above the 80th in sats per dollar. And we did even get above the 90th. Which is kind of interesting. They mirror pretty close, but not exactly, right? So here, back in that big dip, the SBF dip, that hit the 90th, or in other words, the 10 percentile on this chart, which actually looked a little bit worse on this chart, right? See, we got under the 10th. But here, that was the 10th. I'll check my codes. This isn't completely being inverted, but it shouldn't be. It's running on what it sees as the data and running fresh regression. So that's kind of interesting. It's a different, slightly different view. So what's the takeaway? I would say this has actually been a more bullish run if you look at it in sats per dollar. Right? In sats per dollar, we got above the 8 and the 9. Just inverting. And being above the 8 and the 9 is what we've done every other time in sats per dollar. Sats per dollar. And sats per dollar. Didn't get above the 8. No, we did get above the 8 there. Sometimes you find something on a live stream. Very interesting. I'll just keep showing you so you're clear on what I'm talking about. It's the same chart, it's just an inverse. It's sats per dollar versus dollars per Bitcoin. And, you know, perhaps because of the, what's the word? The precision here. This has a lot more numbers to deal with, rather than this just being dollars and cents. Right? Because back in the day, these are big, big values. Nonetheless, that lines up pretty normal. Wow. You guys ever seen that? You ever seen anybody else run a regression on sats per dollar? Money supply, for sure, as far as the extremes. But this stuff as well, like looking at gold, looking at silver, look at the S&P. But I have to tell you guys, what I just sort of discovered here was surprise. Where's the mode here? Right? As you would expect, most of the time, the price, where these things are close together, that's like the mode. Like somewhere in here is the mode. Where these bands are very, very close together. Okay? So most of the time, as you know, like it's just like here. Most of the time, the cooler levels are closer together, right? It's rare when we get up to the rare air. Okay? But it's very interesting. If you have different precision, you invert it, you go to sats per dollar. So you have a really sharp start here. We actually, this looks fairly normal compared to the other booms. In that we've been above the third, we've been below it, but it means we're in the sort of the 70th percentile range, the inverse of that. We've been above the 2, below the 2, and almost the 1. In fact, we did a little bit the 1. Let me know if you guys have seen anybody else run quantiles on the sats per dollar, but I actually have to say I'm personally even surprised looking at this. Maybe this is the better chart to look at going forward for value. The sats per dollar. Okay, it's still not as extreme of a boom in sats per dollar as it was here, right? Where we clearly And even at the time, this was going to be different because this is focused more on this. Again, these always update. But very interesting. Here, of course, again, we spent months, February to May, then September to November, December, a few months each time in really extreme territory, right? This was the boom of 2021, 2022. In 2017, we spent not long above the 9. Let's go December to January. Let's look at the normal price above the 9 here. A little bit longer, November to March even, with that dead cat bounce. So it's kind of interesting. Maybe I got to check in on this chart a lot more. It's just different precision. It's a different way to look at it. But, we can say that this cycle we actually hit the 90th percentile. We the inverse of that. We did it in the sats to dollar chart, which surprises me. Because here, we did not. Let me know if you're not following this, anybody, but I literally just sort of noticed this just now. I have to look at this more, play around with it, look at it in gold terms. For some reason, it's not working on my figures, but this is actually very interesting, guys, because 4-year cycle looks plenty intact if you look at it in sats terms. And we could go down again like we always have, but here's your level. Embrace the bears, prepare for the bears, if you want to buy more lower prices. Again, this is sats per dollar, so this is basically the inverse. Lower is good for Bitcoin, higher is sort of bearish territory from the perspective of the dollar. But I have to say, I did not expect this. Maybe I'll tweet about it, see if anybody reacts in the power law community, because technically we've been in the rare air. Right here. We've been below the 3, that is above the 7, the 70th percentile. We've been below the 2, above the 80th, and above the 90th. Not long, but we have. Again, not that. 90th, this 90th, the inverse of the normal chart. Again, here, we were never once above the 8 or the 9. Just barely hit it right there a year ago. Let me try to get the gold finally working. One second. All right. Let's look at gold now under this interesting analysis. Let's take off silver. Let's take off the S&P just for... All right, here's Bitcoin gold. I'm going to inverse this. We're going to look at sats per gold ounce. So this is going to be on the top end now. But we're going to see it's going to look a little bit different. If I can get the thing open. All right, so just to be clear, the observation that I just made, which I just noticed for the first time today, right? We've never been above the 80th percentile in the last 2 years, nor, of course, the 90th. So no one thought we really had a big bull. But interestingly, that's not true for the inverse. For the inverse, we've had some rare moves as far as sats per dollar goes. Okay, same type of move that we would have here. Same type of move we would have here. And the 20 percentile is just the inverse of the 80 percentile. Precision is different because we have really crazy numbers here. Here we have, it's being counted, but, we have less than $1, less than a penny even for these values. It's being counted, but it's just different. Okay, now let's look at gold. All right, same deal. We haven't even been above the trend line for gold because of its strength. Right? We haven't, in gold terms, been pretty weak. So let's look now at sats per gold ounce. This is going to be a weird chart. I've never really looked at it myself. Yeah, so here as well, we have not had the boom because gold is still booming. But okay, so let's just go through this. These are boom levels. Below the, the 20th percentile as far as sats per gold ounce is the same thing as above the 80th percentile as far as gold ounces per Bitcoin. All right, boom, 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 2017, 2021. It's true, we have not had the extreme move as you would expect because gold's been going gangbusters. So we did not really get better than the 80th percentile, below the 20th percentile in sats per ounce. But this is very surprising to me because we actually did hit it, albeit briefly. I'll have to tweet this. Curious if anybody has any comments. In any event, takeaway is the same, all right? Takeaway is the same. Don't panic. Don't instill too much fear in your neighbor this holiday season. Spend time with your family. If we go down in Bitcoin dollar chart to, the 10 percentile level, say by the end of the year, next year, it's still $100,000 Bitcoin. If we go down to it before the end of the year, take your pick, 80,000, 75,000. Now let's do this same analysis, but with sats per dollar, and let's look at, the 90th and the 100th, which is interesting. The 100th is more out of whack, which shows you, I don't trust this chart, completely, but this is kind of interesting. So the current price is 1,100 sats, 1,200 sats per dollar. If we have a full sort of retracement next year in 2026, get up to these red levels, which is a negative thing because this is an inverse chart, then you're looking at something like a 25, 30% drop. Could be a little bit more if it happens sooner. So yeah, maybe the 4-year cycle isn't dead. Maybe we just need to start looking at it from sats per dollar perspectives, because we did have pretty extreme moves over the last year. I think that's going to be a good way to end the stream here, guys. Let me know if you have any questions, comments, want to see more charts. More coming next week. Always happy to hear from you guys. Let me know. Have a great Christmas. I'll talk to you before then as well, but happy holidays, and have a good weekend. See you guys.